have you ever really wondered what a stock market catastrophe looks like up close? I mean, not just in the news headlines, but in the actual data. Today, we're going to perform a technical autopsy on one single company, Cherubim Energy Inc., to really understand the anatomy of a stock in a complete and total freefall. Okay, let's just start right here. This is the conclusion from the technical report we're looking at, and wow, it does not pull any punches. Penny stock carcass, death march. I mean, come on, this isn't just dry market analysis, this is a full-blown diagnosis. So our job today is to figure out exactly what these analysts were seeing in the charts to come to such a brutal conclusion. So first, just a little bit of background. The report calls CHR a penny stock. And yeah, that just means it's a stock that trades for under $5 a share. But really, the words you want to pay attention to here are speculative and high risk. This is the kind of environment we're in where things can get really extreme and money can just vanish. All right, let's get into the evidence. Before we start looking at any of the really complex charts, we have to start with the two most basic vital signs of any stock, its price and how many people are trading it. This is where the whole story really begins. So what's really staggering here is just the sheer scale of this collapse. I mean, within the last year, this stock was trading at $1.26. Now, on November 14th, it closed at less than 5 cents. That's not just a little dip, that's a 96% wipeout of its value. Can you imagine buying at the top and watching that happen? It's just devastating. But it's not just the price that's telling the story. Look at the volume. On the exact same day the price hit rock bottom, over 114 million shares got traded. Now, the report makes it clear this is way, way above its normal average. This isn't just some quiet selling in the background. No, this is a stampede for the exits. And this right here is the core idea. You put those two things together, a price just falling off a cliff and a massive number of shares being dumped, what do you get? Well, the technical interpretation is pretty simple. It's panic. The report calls it panic selling. And after seeing those last two numbers, you can kind of see why. Okay, so price and volume are already painting a really grim picture. But technical analysis, it goes way deeper than that. You can think of this next set of data as all the warning lights on a car's dashboard, and they are all flashing bright red. We're about to see what each one of them means. So this brings us right to our central question, that phrase, death spiral. It sounds so dramatic, right? So let's get specific. What are the actual indicators that tell an analyst, hey, this thing is in serious, serious trouble? Let's break it down. First up, we've got the trend indicators. Think of these as telling you which way the river is flowing. And in this case, it's a raging waterfall. Take the Arun down indicator. When it hits 100, like it did here, it literally means sellers have absolute, total, undisputed control of the stock. Every single one of these signals is screaming in one direction, down. Now, if the trend is the direction the car is going, momentum is the engine. And, well, the engine has completely stalled out. All these indicators that measure the force behind the price moves, they're all deeply negative. The overall momentum score is scraping the bottom of the barrel. There's simply no gas on the tank, no buying pressure to fight back against that powerful downtrend. Okay, this is a really, really important point. A lot of times you'll hear the word oversold, and you might think, oh, great, it's a bargain, time to buy. But in a situation like this, it's a total trap. Oversold here means the selling has been so intense, so one-sided, that the indicators are just maxed out at their lowest possible reading. The report says they're yelling oversold capitulation, which is just a fancy way of saying everyone is giving up and is willing to sell at any price. It's a sign of extreme weakness, not a sale. And that leads us to the human side of all this. Because these kinds of extreme technical conditions, where a stock just looks so beaten down, can create some incredibly dangerous situations for optimistic buyers who think they've just spotted the deal of a lifetime. And this is the classic trap they can fall right into. Just look at this sequence. First, the stock collapses, just like CHR did. Then you get this tiny little bounce, a brief little pop upwards. That's the bait. Hopeful buyers pile in, thinking, yes, this is it, this is the bottom. But because that underlying trend is so negative, the stock just rolls over and continues to plunge, trapping all those new buyers with fresh losses. And the report is crystal clear about this danger. It uses this really vivid language, saying these moves are luring late buyers into a continued bleed. So it's not seeing these small bounces as signs of life.
No, it sees them as a mechanism for just inflicting more financial pain on people who are misreading the situation.
So, after laying out all this evidence, you've got the price collapse, the panic level volume, and every single technical indicator flashing red, the analysis brings it all home. What could the future possibly hold for a stock that's in this kind of condition?
Well, the report lays out 3 possibilities. And what's so fascinating is how grim all of them are. The best case, bullish scenario? It's not a recovery. It's just a temporary rally before the selling likely starts again. The bearish path? The collapse continues, wiping out anyone still holding on. And the neutral option? The report calls it purgatory. You notice what's missing? There's no everything's going to be fine scenario here at all.
And this is it. The final brutal summary. Zero catalysts means there is nothing. No news, no event, nothing on the horizon that these analysts can see that could possibly turn this ship around. An infinite downside risk? Well, that's just a stark way of saying that even from 5 cents, the price can still go all the way to zero. It's about as negative a conclusion as you can possibly get. So what's the big takeaway from all this? We've just gone through the anatomy of one company's collapse, reading the story that its data was telling. But it kind of leaves you with a bigger question, doesn't it? How many other stories just like this one are unfolding right now, hidden in plain sight, on the stock charts we all look at every single day?